We hear a lot about the desire that people have to travel as we get towards the summer months. Let's take a quick look at this chart showing TSA throughput. This is passengers getting onto planes, and we can see the recovery really underway. Throughput last week was basically 70% or so of 2019 levels. So we're trying to climb our way back. And let's talk a bit more about the outlook for the travel space as we get into those summer months. James Hardiman joins us now. He's an analyst over at Wedbush. James, thanks for jumping on the show this morning. Let's just kind of start with how you're seeing things in the travel leisure space, given your coverage area and where you're most constructive as we sit here today.
Sure. Yeah. I mean, I think time and time again, when you ask consumers what they're most excited to get back to, right, what represents normality for them, and people want to travel, right? And so I think it's safe to say that there's a lot of pent up demand. I think it's going to come back slowly. I think it's going to come back. Different sectors, different portions of the travel sector are going to come back a little bit differently, right? Close in travel, places that people can drive to, I think are closest to rebounding, getting back to 2019 levels. Maybe a little bit, further out travel, small short flights within the United States, I think are next. I think international travel is probably going to take some time to get back to normal. As I think about sectors within my coverage, I think theme parks are gonna have a pretty good summer, regulations permitting. You still have caps from a visitation perspective at a lot of these parks. I think as I think about the online travel names, right, the Expedia, the Bookings of the world, they're going to ramp here pretty quickly. I think cruise is always the one. They were the hardest hit. They were in a lot of ways at ground zero of this pandemic. I think they're riskier plays here, obviously, to get back on track because there's a lot of regulatory approvals that are going to need to take place before they get back on the water. And so, we've talked about August 1st being when cruises out of the U.S. Begin to get back on the water. But there's certainly a lot that needs to happen between now and then.
And James, just to your point on cruises, those timelines of when the major Royal Caribbean, Norwegian Cruise Line, Carnival, when they might sail in the U.S., that timeline continues or seems to be being pushed out even more. And these companies last year took on a lot of debt. So if those timelines get pushed out, what's the impact of that debt pile for this year? And do they have the capacity to raise more debt?
So to answer your last question first, I do think they have capacity to raise more debt. I mean, the diciest time of all was when they immediately went into layup mode, right? March, April, May of last year, there were real concerns as to whether or not they'd be able to raise the debt. I think the debt markets have loosened up substantially. I don't think any of these companies are a real threat to go away. Having said that, the longer they're laid up, right, the longer they go without being able to do what they do, get on the water, those debt raises become permanent. As we sit here today, there's a unprecedented amount of debt on these balance sheets, but the good news is there's an unprecedented amount of cash as well. And so if they were to open up tomorrow, the debt would be a little bit misleading because they would have some cash to be able to pay some of that down. If this works its way into next year, right, 2022, there's probably going to need to be incremental capital raises that need to take place here.
Is there one cruise line, James, that you're concerned about that may not survive this pandemic?
No, of the big three, Carnival, Royal, Norwegian, I think they're all going to be just fine. It just, to the previous discussion, it's really a function of how much earnings dilution has taken place as a result of both debt and equity raises. But I think they're going to be fine.
And James, just finally looking a little more closely at the airline space right now. There was talk this time last year, I think, was the famous Chamath appearance on CNBC about let them fail, all that nonsense. None of them failed. All the major airlines are still in operation. What's the future of that business look like from your vantage point? Obviously, had its challenges, 18, 19, even heading into this kind of crisis. Where do we go from here? Is it consolidation? Are we going to see new entrants get excited about some of the domestic routes that have maybe opened up? How do you see that playing out?
Yeah, I mean, look, I'm not as close to the airlines. That is not a sector that I follow. Having said that, I do think there's going to be significant pent-up demand that benefits those names as we move forward. I think, my bigger concern would be, business travel moving forward. Will we ever get back to where we were in 2019? I think it's safe to say that as a percentage of the total, business travel is going to be down substantially. But how much does that sort of weigh on travel as we try to dig our way out of this would be my thought.
All right, James Hardiman, analyst over at Wedbush. James, appreciate the time this morning. Thanks for hopping on. Hopefully we'll be in touch and talk soon.